LTNC quarterly report Q1 2024. As I said in the intro, we're breaking it down between the great, the good, the bad, the ugly, so it's easy to digest for people as we go along. This is the first quarter of the year. We're finally getting our things under us for the company. It was the last quarter before going pink. And so to start off, the great LTNC growth profit ratio. And so for people who don't know what a gross profit ratio is, it's your gross profit divided by the total sales. And we'll see in Q1 2023, we had a gross profit ratio of 17.5%, very low. All right. We want to see it higher, which means we want to see our profit, start to outweigh the sales. All right. And so in 2023, that was 17.5%. But in Q1 2024, it was 34%. So essentially, it was double. All right. Which means we are taking more profit in from our sales, higher margins, and things to look at. So okay, what will have make us have higher margins, to have higher gross profit on our sales? Not as many discounts, and I'm not even talking about website discounts for people who go online. I'm more talking about retailers in a lot of ways. Because if they want your product, if you want your product on their shelves, they're going to want to buy your product at a discounted price. Okay, and so that hurts overall profit from the sales. Big bulk orders. That's another thing that's going to hurt the gross profit. Obviously, as a company, in the long run, we do want big bulk orders. The more we can sell at one time, the better. But it's a balancing effect. And the better we get the more efficient we get in our operations, if we can naturally get our margins higher over time before getting into retail and bigger box stores, that helps us in the long run. So when we do have to give those discounts to bigger box retailers, we're already gnawing on the bone of what's possible margin wise. Okay, so LOCK'DIN has doubled its gross profit ratio year over year, a great sign. To double that at a smaller scale is promising. The more we sell, the less it should cost. Economy of scales wise. In my opinion, if the company stays away from jumping into big box retail stores too soon, that will allow operations to run more efficiently without giving major discounts to stores and paying product for placement. It is important to keep margins as high as possible to fund our future. I am open to regional convenience stores, small grocery store chains, and gyms at the right price, but direct-to-consumer method is the best, still the best for LOCK'DIN as they continue to grow with limited cash resources. So direct-to-consumer, head over heels for it. I think it's the best option for us. I really do. And so for some gematria, we have startup drink companies need to consider gross profit ratio while expanding. That equals 333 in English reduction. We have gross profit ratio, a key metric equaling 137 in English reduction, which is the 33rd prime. As you see, I still have my 1,555,055 shares of LTNC. I'm down almost 14,000 still. I will be looking to add to my position at some point if my targets are reached, and we'll talk about that a little bit when we get into the bad portion on where potentially the price could go. But right now, LTNC locked in. Great. Gross profit ratio looking amazing. We doubled it year over year from 2023. That's because it's been direct to consumer. No discounts to large sales at all. Obviously, that's going to change in the future. But if we can hone down on our operations now, and we can just get as much margin off the bone as possible, that's only going to help us in the future. All right. The good cash inflow from financing. On April 19th, 2024, an LTNC investor subscribed for 137 million restricted common shares at a price of 0.002 per share for a total of $274,643. These shares are subscribed and paid for and have not been issued. On May 9, 2024, LOCK'DIN entered a private placement agreement for $500,000. The investor purchased the rights to receive 6 preferred H shares, which will then convert into 100,000 shares of common stock. And we'll talk about this more. The Series 8 shares will be filed before the end of the second quarter of 2024. The shares issued and the shares issued. These shares are considered subscribed for and paid for and not yet issued. So some point in the later in the second quarter, which we are in right now, and so is probably going to have to be in June. So at some point in June, these shares should be coming online and subscribed for and paid and issued. For Q2, LOCK'DIN generated, and this is what has happened. This didn't happen in Q1. This happened firmly in Q2. So, take whatever cash reserves we had in the first quarter of the year. This is what we have currently as of the report now. So in Q2, LOCK'DIN generated $774,000 of cash from share issuances. If cash operating costs stay about the same, LTNC should have close to $400,000 in cash at the end of quarter 2, hopefully. The company has desperately needed infusion of cash to run the business. It is a great sign of people with large pockets are willing to invest large amounts of money to see the company succeed. So this is firmly a good thing overall. We have people who want to invest large amounts of money to get shares to provide us cash inflow. And so now when we see Q2, we've seen low cash reserves on the annual report for 2023 and on the quarterly report Q1 for 2024. But Q2 2024, we should see an uptick. And so now that's promising. Not only we'll have good numbers for sales, because when we got pink, everyone was buying crazy. We'll also have good cash reserves, and the management, if they make good choices, the dilution will fade off over time. The dilution will still happen, but it will be for great purposes. Okay. And so I'm going to get into who I believe who that LTNC investor is and how these Series 8 shares are set up. And this is why it's in the bad. All right. It's a double-edged sword. The bad, LTNC dilution from cash financing. And so I do have from quarter 1, 2024, the share issuances currently held at DTC, which if you talk around OTC circles, held at DTC is the true tradable float for OTC companies. And so right now that's at 8 billion essentially. And once we got current, that updated. So April 5th, we got current on April 1st, but on April 5th, that Friday, it updated. Our DTC was 7.4 billion. And so between that time, between April 5th and currently now, I know it's May 30th today, but as of as of May 27th, when they updated, it was an addition of 610 million shares to our float. And so when you actually look at the papers, all right, this is why it's important to look at the filings, because it will tell you where all of this has went. Okay. So during the year ended December 31st, 2023, the company owed a total of 1.72 billion shares of common stock valued at $541,000. During the 3 months ended March 31st, 2024, at the end of Q1, the company sold 225 million shares of redeemable common stock for $225,000, including the amount Tom Mazzaro of the company's CEO purchased 50 million shares for 50,000. During the 3 months ended March 31st, 2024, this is important. The company is obligated to issue a total of 350 million shares of common stock valued at $120,000. So that's what we're looking for. All right. So understand that the company was obligated to issue a total of 350 million shares, and they did so. Okay. And add on to the fact that the company also sold 225 million shares of redeemable stock in quarter one, also for some money. That money for quarter one was already ran through. If you actually look at the numbers, our operating cost for the quarter one was like $270,000. And so that money, that those shares that we sold in quarter one, that was already run through. And so the financing we got for Q2, that's a new batch. And so that's where most of the dilution came from, the sale of the 225 million and to the obligation of the 350 million shares to the services. So up until this point, we still have 1.37 billion shares that need to be vested from locked-in professional service fees. So we're not out of the woods yet. The bad continued. Confusion on quarter two preferred H share issuances. And now, after reading a little bit more, understanding how some of these things work, I do believe the person who gave us, who got all the quarter two share issuances is Luis. It just makes sense. And he also has the Series 8 shares as well. And so a little bit, there's a huge difference on this financing deal being company friendly for locked in to being borderline silly for LTNC investor or having the benefits on both sides. And while I do have my answer, I do want to still go through the process so you can understand, investment wise. There are two scenarios which would affect the stock price due to the Series 8 shares issuances. Scenario one, which I don't believe to be the case after more talking and thinking about it, all Series 8 shares equate to 100 million in total, meaning an investor paid 500,000 for 100 million in shares above market value on May 9th. The price of LTNC was 0.004 on the date of the deal, meaning the investor paid a total of 20% premium of shares that could have been bought on the market. The investor average share would have been 0.005 for the 500K divided by the 100 million shares. And again, that's a little too company friendly. It wouldn't have made sense for the investor. So that was the first scenario. At the time I was writing this, I thought that could be a possibility. But after asking Tom questions, I didn't get an answer. So I think, and if it was the case, they would have said that this was company friendly. But that's okay, because scenario two isn't so bad either, especially if it's Luis that holds them, which I do believe he is. Each one, so in scenario two, each one share of the 6 Series 8 shares equates to 100 million shares, meaning 600 million LTNC shares for the 500K investment. The average share price would be 0.00083, which is triple zeros 83, which makes a lot more sense. And this, in my eyes, more reasonable for the investor. So you pay $500,000 cash upfront for the discounted shares. When the investor converts the 8 shares, the float expands. The price drops, but the investor would still be in the money as to his investment. Instead of his investment being converted at 0.005. All right. And so how these shares work, again, at the bottom, this is what it says. This is why you got to read the filings. All right. The company has had investors subscribe the The company has had investors subscribe for the rights of preferred H shares, with the company will have designated the second quarter in 2024. Each share of preferred H equals 100 million shares of common stock on conversion. So that means is if you have 6 H shares, that's 600 million shares. Okay. And these are not issued yet. They will be at some point. So should reflect on the Q2 report. Now, it doesn't really break down on the stipulations for these shares, but hopefully there's a timetable on conversion. So if the preferred holder, who once again I do believe it's Luis, if Luis converts one H share of those 100 million common stock, say at the end of June, hopefully he can't convert another 100 million for another month or two. And so that spaces out that dilution. All right. We still get our money. He still gets his shares. But when you space out the dilution, it doesn't hurt the stock as much. And I think that's the best course of action for the company. While 600 million shares is a lot, we already saw what 600 million of share issuance did to LTNC in Q2. It happened in Q1, but we saw what happened. So we went essentially, I mean, our peak was a penny, but really we went from say 0.07 to 0.004. All right. So that's what you can kind of keep in mind moving forward for the dilution. I still believe this is a net positive for the company, as we need the large infusion of cash to operate. The stock will be suppressed, but it would be for the best reason possible if management can use the cash wisely. This is in the bad section of my analyst due to the ambiguity. If lockheads have to wait till Q2 ER to see the effects of the H shares without explanation from management, I believe that goes against transparency we've been told to get. I understand you can't talk about everything, but again, transparency is what they've been preaching, and so that goes for everything. So it's looking like it's going to be 737 million shares could potentially be issued in Q2. All right, and so keep that in mind. We've gotten cash, we've gotten services, but we have to pay the piper at some point. And remember, we still owe those 1.37 billion in professional service fees. All right, the bad continues. And again, the bad section is a little bit longer than everything else. It's because we're a startup company. That's par for course. All right, I'm going to give you the good with the bad. I'm going to give you the good with the bad. LTNC still owes James DePaletto. LOCK'DIN has accrued a total of $2.1 million from the total loan and accrued interest that Mr. DePaletto is claiming. The company is currently in negotiations with other parties to settle the lawsuit. This needs to be settled fast. It's not a hugely bad thing. They've been talking, they've been in talks, but we need to stay out of the courtroom. So we could just put all our energy back into selling water, selling nootropics, and building our brand. But we keep having to deal with all these other legality issues, and it's just, it costs more service fees for one, and it's diluting our energy for what's important. So that's still firmly in the bad category. The bad continued. I promise this is the last bad until we get to the ugly, right? The PFL has sued LTNC for allegedly breaching contract. On April 19, 2024, Takeover Industries Inc. was sued in the United States District Court for the Southern District of New York, Professional Fighters League LLC versus Takeover Industries. The suit arises out of the sponsorship agreement. The agreement Takeover entered with Professional Fighters League LLC December 16, 2021. Takeover was able to continue to make payments as detailed in the agreement, thereby terminating the agreement per the terms there within. This matter is in dispute, but the company intends to vigorously defend the action, and it feels it will prevail as a matter of law. So that's a good thing. On May 13th, 2024, counsel for the company filed a motion to dismiss pursuant of the Federal Rules of Civil Procedures. The PFL is alleged damaging $2.1 million. The company had previously accrued 441,000 for amounts owed up December 31st, 2022. Based on the express terms of the agreement, it is the opinion of the company, as expressed more fully in the filed motion, that the plain and unambiguous language contained in the agreement limits any liability to the amount that the company paid. Locked-In management and lawyers ultimately believe that this case will be dismissed and resolved without any payment to the PFL. But this is in the bad section because we need to find a way to stay out of the courtroom, as I keep saying. We need to stay out of the courtroom. Our energies need to be focused on offense, not playing defense. I'm not worried about it long term. As you said, LTNC's, Locked-In's lawyers, they believe that they have great standing. So I'm just not going to worry about it for now. So if they feel like they got it in the bag, we're going to keep moving forward. We're not going to worry about it. All right. The ugly. We're at the end of the LTNC presentation. The great, the good, the bad, the ugly. The ugly. LTNC and Locked-In losses. Locked-In has an accumulated deficit of $9.3 million, meaning it's $9.3 million in the hole since its inception in 2021. We haven't we just haven't gotten out of the hole. We're almost $10 million in the hole. It is what it is. We're a small company. LTNC total stockholders deficit is 3.2 million, meaning liabilities outweigh company assets by 3.2 million. Again, we'll have more cash on hand Q2. We'll get more sales up. So the stockholder deficit should be shrinking. And at some point, hopefully, we have a positive net equity on that in the coming quarters. While this is in the ugly section, and it is ugly to see, being that Locked-In is a startup company, this is very normal. The issue comes in how fast management can turn these deficits around, which will likely take a few years. Any short-term relief is doubtful, in my honest opinion. But I am still bullish long-term. It's just going to be a while. And so look at all of this, the great, good, bad, ugly, especially with the dilution company. I'm not a financial advisor. I could be totally wrong, but I could see the price still to dwindle lower. Right now, it's been, if you look at the stock, it's been low volume and the price really hasn't budged. Best part because the float's essentially locked up. People aren't selling shares. They're buying when they can buy. But most of retail investors have buyer's exhaustion. They don't have a whole lot of cash to deploy anymore. But the fact of the matter is, we're going to be adding more shares to the float soon. The price is naturally going to continue to lower. And if you put my feet to the fire and you ask me, how low do you think the stock can go? Again, I'm not trying to be a bear. I'm not even being an alarmist. I'm trying to be a realist. If we saw what happened with 600 million shares added to the float in Q1, and we have about 700 million shares to go in Q2 at the very least, on top of whatever the service fees with 1.3 service fees, we could be a stock that ends up in the trips. I have to say it. I'm not trying to, I'm just trying to give you the real. I'm not saying it could happen. Luis has been buying a lot of shares lately. He has 800 million shares total. Okay. He has almost 1 billion shares. And that's why I believe he is the preferred shareholder. He is the preferred shareholder of those 8 shares. But that doesn't negate the fact that those have to be issued at some point. All right. We still have to issue the service fee shares. So just keep that in mind. I think if we go lower, once the price gets to 0.002, I'll start looking to add, but I'll be looking for trips as well to add to my position. I haven't added in 3 years, but I will if the opportunity arises. But overall, still bullish. We still have a lot to go. So that's it for the LTNC locked in presentation.